Okay, good afternoon, everybody. Today is May 12th, 2023. This is your weekly take on the market. I'll be your host. My name is Scott St. Clair. I am the manager of the Premium Product Group here at IBD. Here's the disclaimer. I'm not licensed, cannot make buy, sell, hold recommendations, cannot tell you how you should have handled XYZ. What did you miss in ABC, if the stock went down. Our circle of competence is learning how to do that, teaching you guys how to spot that stuff for yourself. These webinars are vetted for compliance, so I can speak a little bit more freely on the webinars, which is nice, and that's why we have the disclaimer to allow for that. Okay, so market thoughts, stocks to watch, industry groups, and quote of the week. And so I have a few things to talk about in the market thoughts section. Here is a chart on the relative price performance of tech stocks versus the S&P. You can see in the mid to late 60s, the outperformance peaked at 2 standard deviations. In the late 90s / 2000 top, it peaked in the same spot. And here we sit now. Interesting, it is only 3 observations, but so far we've sat above and or at this 2 standard deviation for a much longer time period than previous. So maybe this time is different, right? A famous saying in the stock market. I think we're all aware, we all observe that there's not a lot to buy. The breadth in the market isn't all that great. The money is concentrated in the Apples, the Teslas, the Metas, the Nvidias of the world, and it is what it is. If you either can participate in them, and I've kind of missed that trade for sure. I've made little to no money in that trade, maybe a little bit in Google, but I've missed the Apple, the Microsoft, the Nvidia, and Nvidia is probably the one I regret the most. Besides the fact it went up the most, but it just has all the trappings of something that I should have participated in. So being a student of history, sometimes you see things a little too soon. And you have to recognize that, right? And that's why I probably should have participated at least a little bit, because I have a plan to get out if I'm wrong. So that's just food for thought. Things I think about. The market hasn't gone anywhere, and I apologize to Brent Donnelly. This is his tweet, and I had his handle in here, his Twitter handle, and I don't know if I pasted it in there wrong or something, but it's gone. Brent Donnelly is his name. And days the S&P is traded between 4,000 and 4,100 handle. A handle is a single point on the S&P futures since 2021. And I've interpreted this tweet as a little bit tongue-in-cheek and fun. You can see the cluster of days where the S&P it's basically gone nowhere for a long, long time. And I remember I talked about that on the previous video where I drew that line across the chart. And if you you put your money in the S&P a year and 3 months ago or something, you're probably basically even, barring dividends. So the market hasn't made a lot of progress, hasn't really gone anywhere. Stan Druckenmiller is on the circuit for whatever reason, but the Sohn conference video is on YouTube. I would watch it. I think it's very valuable. I'm not going to get a trade from him. He's short the dollar, I think he said. And I think he says long Nvidia. I can't remember, maybe a couple of other trades that he likes copper, but maybe not right now because he's not a fan of the economy. But I'm not going to go out and go long Nvidia, short the dollar, and buy copper. I just like the way he thinks. And Stan Druckenmiller's record is, second to none as far as performance on big money, on assets under management. He says, just because I said I expected the market to be flat, same place it was in 10 years, doesn't mean it will be a lost decade for investors. You could have made a lot of money in the 68 to 82 period, being long stock market and being long the right stocks at the right time. So I've kind of, not that I'm putting myself anywhere near Stan Druckenmiller's camp, but I kind of think that we're stuck in this range. The high in the NASDAQ is in for a number of years, and maybe the low is in for a number of years. And you're going to go sideways for a long, long time. And let's just say I get that right. Well, there'll be periods to be long the stock market, and there'll be stocks that go up a lot. Let me give you an example. I was looking through a couple of model books I had, And this list could have been a million miles long. So McDonald's went from 14 to 62, from October 70 to July 72. CLO, I can't even remember what, I think it was Coleco, which was like a video game maker, 9 to 30. BOL, I can't remember what BOL was, 58 to 190. And that's important too, right? Because McDonald's is in here, Humana is in here. I think Humana still exists. Walmart is in here, but a lot of these aren't in here anymore. So they're just names that have come and gone, and they've made tremendous moves you could have participated in. GRD, 42, ESY, you get the idea. LQM, $2.40 to 22. These are all 8, 9, 10-fold moves, and the book is this thick. Okay, so they're out there in a period where the market essentially, went nowhere. A lot of stocks made really big moves. So be open-minded to that. And the reason I like this, I thought about this a lot, is let me jump to my chart on the NASDAQ. I'm on IB Live once a week, and it's a love-hate relationship, to be honest with you. I like the show. I love my colleagues, and it's, I guess, 90% of the people tolerate / like me. Not everybody does, and I guess that's the way it's going to be. Everybody's going to like you, but one person accused me of being too pessimistic. Like, how could he ever make any money? How could he have run money for William O'Neill? He's still pessimistic. And I thought about it, and I guess I have been recently a bit pessimistic about the market, unfortunately. But I am the first to recognize that I tend to get pessimistic about it right at the lows. So it's actually, if he's right, then it's in his favor or her favor that if I am, because you're probably set up for a big move. But I took it a little personally at first, and I sent a screenshot to my colleagues of my equity curve and said, does this look like the equity curve of a pessimist in a bull market? Because I've been tracking my equity curve very closely since 2010. And I did so because I wanted to be a portfolio manager at William O'Neill. So I was tracking my trades and my activity very closely, so that if I ever got a chance, I know how those guys got their chance. They went to Bill, and so that's, I wanted to have the records of that. And, it's straight up, okay, pretty much. And I don't always beat the market, but there have been a few times where I, trounced the market. And there's been a few times where, market beats me, which is fine. And a few times where I didn't do anything. It did nothing. And then maybe the market did a little bit or did nothing as well. But I tend to be, at least as I've gotten older, more in survival mode, because I have seen people come and go in this business. And I've seen a lot of people essentially win the lottery in the stock market and then lose it all back. So you always read about these stories about so-and-so that won the lottery and 5 years later they're broke. And it's just mind-boggling to me that can happen. But I've seen it. I've seen where people made, lottery type returns in their account and built a fortune like that. And then 5 years later, it's all gone. So that colors me, that experience sits with me. And one of my my mentors, is, he says, I'm all about surviving. So he when the market does well, he does well. When the market does poorly, he sits it out. And sometimes the market beats him when it does really well, but he never underperforms the market when the market does really poor, because he has a survival mentality of getting, of being a tad bit, protective. So here's my journey, very quickly, and you're welcome to fast forward if you want to get to the industry groups. But this is exactly where I opened my first account in March of 1995 with $3,500. Why? Did I know it was going to be a big bull market to start? No, it was the first time I had any money. I started as a stockbroker and somewhere in here. And I think that year I made $800 a month, for 12 months or whatever is I survived, barely surviving. So I finally had a good check one month in must have been in February, and a month later I got a check for 5,000. I'll never forget, and I put 3,500 of it into a brokerage account. And so if you fast forward, now this is a monthly chart, you can see how the market just basically did nothing but go up. Even when it was down this month, it practically closed unchanged. Even the 2 pink months closed unchanged. Tried to go down this month, closed up. So I was influenced by that experience for sure. Stocks only went up. It was almost always 100% long stocks. I'm sorry, I meant to say 200% margin. Always. What I would calculate with as much margin as I could in this time period. And I would even go over at some point. I started to get calls from the margin clerk. I don't know if I've ever told this story, because back then they didn't quite have the checks and balances that they do now. And you could, if I turned, I think in 1995, I turned 3,000, 3,500, and I added a little bit more up to 10, I think, up 25-fold. So to do that, you need a bull market, you need good stock selection or lucky stock selection, a little bit of both, and you need leverage. So, sometimes I'd be 150, 170% long. I'm sorry, 250, 270% long. And you could get away with that for a day or two or three till the margin clerk saw your account and said, they called our margin clerk and he called me screaming, "Scott, what are you doing? You're way over." And I'd have to sell some stock and get back down. So I was influenced by the experience. I thought stocks only went up, so it didn't make sense not to be fully margined as much as possible, right? So if you fast forward to 97, here's a monthly chart. And then there's a little bit of a pullback here, but it only occurred for 1 month, right? And then back to the races. So now we're in March of 98. And so that's me. And here we are 3 years later. So what type of experience do I have? What do I think about stocks? They only go up. You find the right stocks, you can make a bloody fortune. And I was making incredible money for a 25, 26, 27-year-old. I thought I was going to be the next Bill O'Neill. And along the way, I sort of became a student of market history and started learning about it. And I had a mentor, like I mentioned, who would recommend books, and he would go to these the William O'Neill seminars, and I'd listen to David Ryan and Bill O'Neill, and you'd become more astute of an investor, slowly but surely. And this is the 1998 bear market. And I kind of missed this one. I got in much later than I probably should have. I know this is the one where Bill started to spot AOL and Schwab right here. And I thought, we're overdue for a bear market. So I started to get smart, right? I started to get smart and thought, here comes the bear market. Everybody says it's going to finally come. And it didn't. And then you fast forward to 2000. Oops. And these are all monthly bars, but you can see it's just incredible performance straight up. So I only know, and this, where did I get started? In 95? Can't even see it on the chart. So somewhere down in there. What do I know about stocks? They only go up. It's easy. You make money buying, buy. And then it changed. The market changed, and I saw a lot of people give everything back. And this took everything that a lot of my friends and traders I knew made. And I saw people that had, made 7 figures in their account back to square one. And that's pretty scary to me. And I've had a few drawdowns in my career too, and they're scary. And so they color your influence. And so I tend to be a bit, skittish, I guess, rather than pessimistic. I'm not really pessimistic about the market. I think it'll eventually come out of all this, but I am I tend to, be a bit skittish. I'm not totally drinking the Kool-Aid all the time, for lack of a better term. So that's my experience, and here we are now, and it's from, if we go to the monthly. So that was the 2000 top, and then here's the financial crisis, where that was even scarier than this. So I've gone through these two very scary periods, and so I tend to be I don't know if pessimistic's the right word, then so be it, whatever. But I'm trying to survive, and I think if I can survive when the going gets good, I can participate as good as the next guy. Maybe not as good as somebody who's incredibly optimistic, who only sees, stocks going to the moon. But that's okay. I made over 100% in the COVID run. Now I know a couple of the guys that made 200, 300, 400% in the COVID run. And that's awesome. That's great for them. But I'm trying to keep what I have. And my account's at all-time highs, pretty much, give or take a few percent. I don't know. A lot of those guys might not be. They might not be. So that's my story, and I'm sticking to it for now. So how did I get to all this besides that comment from Druckenmiller about the market going nowhere, and even he says he tends to get a bit pessimistic. I find that, unfortunately, the longer you're in this business, you've experienced some of these things, and you tend to get, at least the guy, everyone I know, and even Justin has said about Bill, that as the money got bigger, he tended to get more conservative about it. And it's the right strategy. Mark Cuban, I think it's Mark Cuban, said, you only got to get rich once. He's uber rich, but how much do you need, right? And there's nothing worse than having enough and then losing a lot of it, if not all of it. And I've seen it happen. So that's why I tend to shade a little bit towards being I guess if it's true, it is what it is, being pessimistic. I can only tell you what I see. And I would say to anyone out there, you think, I have a friend who watches a guy on CNBC, and he says he's a mush. A mush is somebody who can't ever make money. And he fades him every time. He fades him. He goes the opposite. He's short Nvidia, he buys Nvidia. He's long Tesla, he shorts Tesla. And he makes money doing this. And I laugh, but he's constantly telling me, oh, XY, so-and-so, and I live in a glass house, so I'm not gonna mention any names. So-and-so likes XYZ, I'm short XYZ, or so-and-so hates the market here, I'm getting long. And so if I would say to anyone, if you're welcome to do that, there's a huge market, and if I give you something, and that if I say I'm in XYZ, you're welcome to ignore it or go the other way. I would just say that maybe think about like the other side of the trade. I find very few people think about the other side of the trade. So why are so many people short that stock? Or if I'm short it, like let's say Tesla, when I've been short, why are so many people so enamored with it and long it and refuse to take profits, even though they've made gigantic sums of money? And I want to understand their thinking and how they're thinking about it. I think it's very, very valuable. So long story short, there are McDonald's and Humanas and Walmarts out there. They're in our database now. They're going to go up 3, 4, 5, 6, 10-fold. So don't give up on it. Do your work. Try to find them. You might, and if they go up tenfold, you're not going to capture the whole tenfold. At least that's my experience. But you could capture a large portion of it. Or if it goes up tenfold, even a quarter of it is incredible portion of the move. Okay, so let's. I don't know if I even pulled up the indexes currently. I went off the rails so many times in that session. So let's talk about the industry. We'll talk about the indexes briefly, and then we'll get into the industry group. So I think I sort of said, but like there's just not a lot there. It doesn't look bad. The indexes don't look bad. They don't look bearish. I would, if for me to be more bullish, I want to see some oomph. I want to see them actually go up. I want to see stocks go up and stay up. That's always been my problem with the market in the recent time period as far as longs. I can find stocks to go up. I just can't find them to stay up. And I'm just not very good at losses. So I get up 3, 4, 5% in something. It gives it all back the very next day. I tend to want to get out. I know it didn't, I can't expect it to go up every day, but I just don't see if it's shown such good power on one day, why it should give back all of that gain pretty much the next. I just don't find that to be valuable price action. So S&P, same thing, right? So here's 4,000. And here's, oops, I drew that a little too high, but there's 4,100. And it's just kind of stuck in that range. The industry groups. Computer software education. I saw this was number 1, and I thought, oh, that's interesting. Who is the leader in this? Spotify has done pretty well. Duolingo has done pretty well. Let's pull up Spotify. So it's a pretty big move off the lows. It's like a double. And Duolingo, I haven't looked at the last couple of days, but I think it's been holding up pretty good. Yeah. This is 60 and change to almost 150. Pretty good move. So that'll help to explain that group. Housing still holding its own. Gold and silver, although a little bit of weakness this week, holding its own still. I think AGI went down a little bit, did it? Yeah, but still very constructive action. I would like to get maybe a little bit down a little bit further, or maybe a little fake out through there, then back up. That would be ideal. Apparel, shoes, you've got on Crocs, although Crocs broke down, but I think there's another one, Skechers, which is holding up well. Beverages, non-alcoholic, interesting. That would probably be like Celsius, I would guess, CELH. Yeah, so this looks really good. I've never owned this one. The shorts have been wrong pretty much in this stock. It's always had a really high short interest, which has bothered me. Why does it have that type of short interest? So I've never participated in this stock, but sure is acting really well. And this is a pretty strong quarter right there. Internet content. So Google, which is acting much better. Finally kind of came out of this area on the AI day. So that's acting much better. Telecom, satellite, computer software. Semis are slipping, right? Yeah, I don't see the semiconductor group in here. So let's pull up like SMH. So the relative strength is lagging a little bit. It's building the space. It doesn't look terrible, but it's not really leading like it once was. And you had a couple of stocks kind of lose their luster, like ALGM and ACLS, although it's not too bad. It's okay. It's near the 50-day, but AEHR, oops, lost its 50-day. It is a big area. There's lots of stocks in this group. So, and then of course there's NVIDIA. So let's go to the stocks to watch. Let's start with the big boys. So we have Apple, which the quarter is very pedestrian on paper, just on the eyeball test. Under the surface, I don't know. I don't know if the market thinks things are going to be so much better, or they're just glad that they're not getting worse. But the stock is holding up like a champ. Relative strength of 89. That's pretty high for Apple. Is what I want to get this right. I think I sent myself a screenshot of. Oh, come on, please. I hope I don't want to mess this up. Apple is the third largest. And I'm not, and listen to what I said. The third largest stock market in the world. All right. So I know I saw that tweet somewhere. I thought I sent myself a picture of that tweet, but Apple is larger than a lot of world markets, and so I don't know. I just I don't. That doesn't mean it has to go down. I just don't know how it can have all that much umph to the upside, being so large from an economies of scale standpoint. But again, I've been wrong about that so far, right? I think last week I calculated this as like a 40% move off the lows. Tesla, not good action today. Elon Musk is stepping down from Twitter. Now, I guess there was a rumor, maybe the Journal wrote an article that he might step down as Twitter CEO. I'm sorry, as Tesla CEO as well. And that hit the stock a little bit. I don't know. I don't think Tesla's a buy, unfortunately, for me. I just don't see any way I could be long it here. And I have a small to medium size short position that I put on today when it gapped up on the news of him stepping down as Twitter. See, that's that skepticism that comes in for me, unfortunately, is that, okay, that's fine, but I don't know how that makes Tesla's business any better. Maybe I see what the market thinks is that he can now concentrate on Tesla, but I'm just Tesla is a massive company and they're going to be most influenced. I know CEO can make a difference a little bit here or there, but they're going to be most influenced by the economy and commodity prices and consumer. Is the consumer willing to pay more for an electric vehicle, et cetera? That's really what's going to cause their business to boom and bust. So that is what it is with that. Nvidia, and I think I saw a Google trend. I didn't paste it in here, but a Google trend on the number of searches for AI is just through the roof. And even Druckenmiller mentioned AI. And so if AI is real, I think Nvidia has to win. They almost have to win. Pardon me. So I am trying to find a spot to get long Nvidia, just to see, because if that's the case, but look at how it breaks out. It's really tight. It's really tight here. It's just stair stepping higher. And even today, the market wasn't all that great, and Nvidia was barely down. I think at most it was down 3 and change. So I'm trying now. You have earnings in 12 days, and I just don't know. Like, I'm probably not going to gap up a bunch because I think everybody kind of knows the earnings are going to be good. I'm assuming they're going to be good, but I also am like, I don't know. How could it gap down 20? Let's say. If Nvidia gap down 20 and you're a mutual fund or you're a hedge fund, you're running big money and you don't own Nvidia, wouldn't you see that as an opportunity to get in? I would think that would be the case. So I think it's kind of stuck here, and you just kind of have to find a spot to buy it. Maybe what does David Ryan call it? Well, I call it a probing position, but he calls it a mental health buy. So depending on your account size, you buy 100 shares and just see what happens, leave it be. But this is definitely the the leader, if not the leader. So today you had really good action in First Solar, really good action. Now, First Solar bought a company and its stock went up 26%. That's really, really strong. So I couldn't bring myself to buy it, and it closed right on the low. I wish I had, but just the fact that like most stocks go down right when they buy somebody, and this one didn't. So the market saw this as super, super positive. And most of the day, even when the market was selling off, I was watching First Solar, hoping for a pullback, and it just couldn't go down hardly at all. Another great clue. So on the watch list, I did mention CellH already. Suave holding up really well, although today, gave back a little bit, but coming out of this really large cup of handle. The shippers, so I was starting to get excited about TNK. So it gapped up yesterday in really big volume. Look at this quarter, right? So I big earnings and sales. That's what moves stocks. Earnings. And look at the number. If they get this right, $13 this year in 2023. I mean, they've never made $13 in the history of the company, it looks like. Add all these up, it's less than $13. So it's incredible the money that they're making. They're very cyclical, and so the market might be saying, this is as good as it's going to get. And so I bought the stock yesterday, and then today it gave it all back and then some. And this is what I'm talking about, why I'm a little skittish, and it's hard for me to be a very bullish, all-out bull on the market. This type of action shouldn't happen. I'm not saying it has to go up another 5% that day, the next day, or 12%, but when it's up 12% one day and then down 5% the next, you can see the math is cruel. Up 12 and down 5 is pretty much right. And I'm not counting the gap, but no matter where you bought it yesterday, you're either unchanged or slightly down, and that's frustrating. So I didn't sell it just yet. I'm going to give it one more day or two or three. It's a probing position, but this is what I'm talking about, which keeps me kind of not all that bulled up on the market, is this type of action. URN, which is in that same type of group. So not up as much yesterday, but not down as much today. Let me change the chart again. But look at the last quarter, up 500%, revenue up 200% almost. So I like this one too, but I want to see higher prices. And I mentioned First Solar, TNKU, and CellH. So I think that's all of the kind of stock. So Lilly had a kind of a reversal today, and so I sold Lilly. I had a small position in it, and it's probably, to me, when you get this kind of reversal, it's like a little short-term sell signal. If I owned it correctly, here or here or here, I probably wouldn't have sold it, but I owned it, here incorrectly. So I don't think I can afford to let it go down too much. It would, and I do own NVO, which is very, very similar. And so I had two in the same group. So I kept NVO. And so that helped to influence me on why I might sell Lilly. And I do like the shippers, TNK, EURN. If I owned both of them in full positions, I might do some selling of both, or I might get rid of one and keep one because of the way they're so correlated. So this seems to be holding up okay. Last but not least, is there anything? What am I missing? I don't feel like I'm missing anything. I don't have a lot of exposure on. I do own one ETF. It's the Japan ETF, and so in the old days, we used to, if a company did a company or an ETF in this case did an unusual split, a very large dividend, we would adjust the chart accordingly, and then we would get emails like, okay, how come Thinkorswim says the high is 40, but you guys say the high is 38 or whatever. And this because we would adjust the charts. And so we stopped doing that. We're not adjusting them for these unusual dividends anymore. But then now it's kind of hard to read the chart. So it makes it a little harder to kind of I don't know exactly how much that dividend was, but like, where is it in the food chain? So you see it broke out of this little flat base here, and it's the highest it's been in a long time. So it gives me a little bit of exposure on the long side internationally. Okay. All right. So let's jump to the quote of the week. And I was going to use a George Soros quote because of my kind of talk about why I tend to be skittish, that word survival. I saw somebody quoted George Soros, if I had to sum up my practical skills, I would use one word: survival. And Scott O'Neill told a great story, and I thought of this just now with that word. On his dad, he met Charlie Munger in an event a while ago, and he said, "I'm Scott O'Neill. My dad is William O'Neill, founder of Investors Business Daily, William O'Neill and Company, et cetera, et cetera." And Charlie Munger said, "Ah, I know of your dad. He's a survivor." And that's a very very powerful message he was sending to Scott. Scott tells that story a lot because it's stay in the business, stay there when times are tough. You gotta hold on to your capital as best you can, because when things turn around, you want to be there. And Scott or Bill had a study commissioned on when he started William O'Neill. And I don't know when this commission was commissioned, let's say 20 years ago in 2000. And so when he started William O'Neill and up to that point, 2000, which brokerage firms existed in at that time, advisory firms, whatever it was, and how many existed then at that point. And it was like 90% of them were out of business. They had either been merged or bought out or gone away. And so there's something to be said for surviving. You don't have to beat the market every year, because if you survive, the power of compounding will eventually, you'll come across a year like 2020 or 1999 or 2009, and you have capital to participate. Because those holes are tough. That when you dig a hole, if you go down 10% off your high or 9% off your high, you got to make 10% to get back to those highs. If you go down 25%, you got to make 33. And if you go down 50, you got to double your account. You have to double your account to get back to where you were. It's very, very difficult to dig out of those holes the farther you go down. All right. So I apologize. I went off on a tangent again. So this was the stop I had. The quote I had lined up. Jason Shapiro was on a podcast, I think, or a YouTube video. I find that 80% of my stops I wish I didn't take. I get stopped and then the market goes back to where what would have been my favor. But you have to realize the other 20% are why I'm still in business. Okay? Because those stops, if he had ignored them, wipe out his capital or take a significant amount of his capital away. And I didn't even realize this, how appropriate this is. I'm still in business. If you've read Market Wizards, and I've read all of them more than a handful of times, every one of them more than a handful of times, it's kind of funny how many of the kind of the older books, the older guys started and or early on in their career, they were involved. They were there on the day of the stock market crash in 1987. And I don't think that's a coincidence. I think the fact that they saw what can happen, that something really drastic and bad and crazy and just unprecedented can happen, like a 2 standard, 3 standard, 20 standard deviation events can happen many times more than it's supposed to. And I think that's why they've been so good, is because they have that kind of fear on and imagination on what can happen. I think it's good. I think you should have. I'm trying to stretch my imagination, my vision to the upside, because I feel like maybe I want that to be further to, like a Tesla or Nvidia or something like that. Just the amazing run that they can go on. So it's good to have that. A lot of people have that. They don't have the other way. It's hard for them to imagine or believe that a stock could go down 80, 90%. But if you study history, you know that it can happen. All right. So thank you everyone for your patience. I know this might have been long, but hopefully you got a little bit something out of this. Contact information, marcusmith@investors.com, 800-424-9033. Have a great weekend, everybody. Thank you.